Hi, this is Jack Miller at Gelt Financial. I want to talk to you today about JV equity or joint venture equity deals on commercial or investment real estate. We love these deals, by the way, and I want to tell you what types of deals we're looking for, what types of deals we're not looking for, and give you examples of deals that we've closed and how we've helped sponsors make money and get ownership using our capital. So we know exactly what we like and what we don't like. So what we like are deals where our check size, it could be stabilized or value add deals where our check size is between 250,000 to $2 million. Again, and we're the sole investor. So we like smaller deals. And again, that's just our check size. So depending on if we're a first, if we have to provide the first mortgage or just the equity, but you get the general idea. We're not doing big deals. We like to be the sole investor because if we want step-in rights if something goes wrong, and this is why we do JV equity and not preferred equity deals. And what I mean is, I hate to start a video talking about negative, but it came up, so I will. If God forbid something happens, if poo-poo happens and the deal's going downhill and we're at risk of losing our money, we need what we call step-in rights, rights to control the LLC and solve the problem. So we're doing value add and stabilized deals. We don't do ground up land construction or anything of that nature or heavy rehab. Properties we like multifamily, mixed use, retail, self-storage, office, flex. We've done some single family dwellings, credit tenants, or any kind of freestanding commercial. We'll go pretty much all over the country except California, Nevada, and Arizona. And we like major MSAs. We're urban and suburban lenders and investors. We don't like rural. We're pretty flexible on the time frame. We'll be in a deal for a short time. If you want us in for a short time, we're being in a short time. But if you want to hold the deal for 20 or 30 years, we're fine with that. So we have some flexibility on the time. To be blunt, we like long-term holds, but we'll do short-term as well. Where do we fit on the capital stack? Now, this is really, there's two types of ways we do this. And I'll give you different examples. The first way is we can provide all the money, be the first mortgage and the equity. We're going to probably be a little more expensive than a bank, or probably double a bank's rates on the first mortgage. But if you can't go to a bank, we can certainly provide the first mortgage debt, and we'll provide the equity as JV equity. Or we can just do the JV equity. Most of our deals close where the borrowers go to a bank, they get approved from the bank, we don't guarantee the bank, and then we provide the equity. So there's really two ways to do it. Again, one is we provide the first and the equity. The second is if we just provide the equity and you go somewhere else for the first. Either way, we're fine with it. You know, the economics vary. But typically, we're getting a pref in today's market. I'm making this in July of 2026. You have to say that because these videos and online stays on forever. But typically, the pref in today's market's a 10, 12% pref. And typically, the split is 50-50. It could be 70-30, 80-20, 50-50. It just all depends on the deal and how much work it is, whether you're personally guaranteeing the debt or not, what you're putting into the deal. But we'll put up 100%. You don't need to put up any money for the right deal. So we move pretty quick. I would say the best thing to do is once you get a property under agreement of sale, to submit it to us, and you could submit it to us at loans@geltfinancial.com or call us at 561-221-0900. Let me give you some examples of deals we've done so you get the picture. So fairly recently in a major city, a sponsor contacted us and he had the opportunity to put a property under agreement of sale that was leased to a national tenant. He thought the national tenant wanted out of their lease. He put it under agreement of sale and below market, but he didn't get a steal on it. He negotiated, he got a bank financing and I think 65 or 70% leverage. We provided 100% of the financing above that, or not financing, the equity above that. So we wrote a check. I think our check was $400,000 or $500,000. I forget the exact amount. And again, we did it as JV equity. We got a pref, we got a split. We actually gave him the right to buy us out at a certain time because he said he doesn't think we want to be in the whole time, which is fine. And he negotiated with the tenant after we closed to terminate the lease. He got a big chunk. He got about 30% of what he paid for the condo up front, and he paid us down, paid the bank down, and he's moving on his merrily way. Another deal we did, very similar. It was a retail center, another Northeast city, where the borrower put a property under agreement of sale. They're signing on the bank debt. I think it was a 70 LTV. We provided 100% of the capital as well. They needed some capital to fix up the property and do some CapEx. We provided that. I don't remember the exact number, but I think it was a 50-50 split, a 10 or 12 pref. So those are two examples of deals we did. Another one, we put up, a guy found a package of single family homes, another big city. I think there were 3 or 4 of them. We put up 100% of the money. We did it as debt, but got a piece of the equity as on the upside. So the common theme in all these is the investors and the sponsors, the people who bring it to us, they're going to get a piece of the property, typically 50%, without putting up any money. So they're happy, they're getting in with no money down. We're happy because we're getting a decent pref, and we're getting some upside for it. So it's a really nice product for the right deal. We're really, depending on the structure of it and what's needed, will determine if we need the investor to have experience or not. But the investor really needs to be vested in it. You know, what we don't want is, and I hate to say this, but it's the truth. A lot of people send us the deal. They'll send us a LoopNet listing and say, see, do the due diligence for me. That we don't do. You really need to do the due diligence for yourself to see if it's a good deal and then bring it to us. But anyway, we're looking to do JV equity deals. It's a great way to get into a property with no money of your own. And we're ready to close. Again, deals between $250 and $2 million. We love to write those checks, all types of properties. And feel free to call us, 561-221-0900, or check us out at geltfinancial.com. Take care and have a great day.